Hello and welcome back to another episode of the For the Property Investor podcast. And we're back with the weekly news segment with, of course, it couldn't be anyone else but Nick Bendel.
Well, I hope you're not secretly recording other news segments with other people, Owen.
No, well, not right now anyway. Yes, but no, I couldn't cheat on you, Nick. You're the one and only for the
Okay, well,
news, that is.
you did say that very convincingly.
Yes. What's been happening in your week this week, Nick?
Well, apart from the fact that I've been dealing with some sort of strange virus, and apologies in advance if I start coughing and spluttering during this week's episode as I did last week. So I'm the owner of a business called Hunter and Scribe, which is a copywriting agency. We write content for finance and property professionals. And over the last week, just to give you an idea of the sort of work we do, we wrote some social media posts for an accountant, a newsletter for a buyer's agent, a blog for a mortgage broker, a media release for a non-bank lender, and an award submission for a real estate agent. That's a typical week for us.
Wow. Did you get any sleep?
Actually, I slept very well this week.
Okay, cool. Well, it sounds like you're fitting a lot into your week this past week. So it's glad to hear. And all my favorite people, mortgage brokers, buyers agents, real estate agents. Wow. So I'm hanging out with the right people.
Well, yes, your favorite people are my favorite people. But the key question is, are we their favorite people?
Yeah, well, sometimes we are. And for some of them, as the saying goes, you can't please 100% of the people 100% of the time.
No, that is true. So I had a reasonably busy week last week. What about you?
Yes, well, it's the 1st of July. I can officially say Happy New Year, Nick. It's for those that don't realise, it's the start of the brand new financial year. And having a father as an accountant, I grew up thinking that the 1st of July was really the real New Year's that was worthwhile following and getting excited about. So yes, it's been an exciting last week. Very busy with everyone wanting bills paid and things done before end of financial year. Lots of accountant conversations and people going, I'm sending you an invoice, can you pay it today? It's like, if anyone wants anything paid in this industry, just and done quickly, do it in that last week of June because it's bound to get done.
Very good advice.
Yes, so that's been my past week. So but today's a big day with end of month and end of financial year run for the business with property management. So it's yes, looking forward to tomorrow where we can just rest a little bit, but we'll have lots of questions to answer usually, I would say.
Well,
So what's in the news this week, Nick?
Well, I know that your business, Leafield, is a national business, and we begin
Yes.
with a national property story, which I think you'll appreciate. House prices forecast to grow up to 7% in the next year. Domain has forecast that property prices will continue growing throughout Australia over the next year or so. Between May 2024 and June 2025, median house prices are expected to increase by up to 7% in the combined capital cities. At a city-by-city level, house prices are expected to increase up to 10% in Perth, up to 9% in Adelaide, up to 8% in Brisbane and Sydney, up to 4% in Canberra, and up to 2% in Melbourne. Keen to get your take, Owen. Do those forecasts for house price growth seem accurate to you?
Well, accurate forecasts. It's like, well, we'll find out in 12 months' time. It's but whether they're realistic or not, yes, they're following the current trend, and it's yeah, it seems like they should be realistic and as to their accuracy, yeah, we'll find out over the next 12 months. But looking at Perth and Adelaide and Brisbane still going strong. Sydney, I guess that means it's going to pick up again a little bit further. Um, the one lagger is Melbourne. It's kind of a bit sad and depressing for Melbourne. But if you've been to Melbourne in winter, you can sort of understand. But their property market historically has always been quite buoyant and strong consistently. So it's quite sad to see that they're not keeping up with the rest of the country. Brisbane's already taken over them, and from a price point of view, and Perth might end up doing the same.
Well, interestingly, part of the reason Perth has been growing so strongly over the past 2-3 years is that for, say, 7 or 8 years before that, Perth did nothing. Perth went backwards, actually. And so there's been a lot of catch-up growth. So I'm wondering, the longer that Melbourne stays flat, does that mean the more catch-up growth that we can expect at some point in the future?
Yes, I would say at some point the usually the other metric we would look at to see whether property prices are lagging is looking at rental returns. But Melbourne rental returns still aren't yielding that well, and it's so. What if they were to start to get up to that 5% level? Then we could say, well, maybe property prices will start to take off. But they're still around that sort of 3.5-4% mark, and they're not really moving much at all. So, and that's not bad news for renters, especially when we've got rising rents affecting inflation so much. If Melbourne's helping to drag that down a bit, then I guess that's not a bad thing in the short term. But as a large city in this country, if they're wanting to keep up with the rest of the country in terms of property prices, then it would be you'd expect something to happen soon.
Well, what's interesting is that Domain is forecasting house price growth in all the major capital cities to differing degrees, but Domain believes that house prices will keep growing. A lot of people are doing it tough, yet if Domain is to be believed, property prices are going to keep increasing. How is that possible?
Well, it's still the plain old supply and demand. It's and that's where Melbourne is still confusing. It's not like there's a huge oversupply of property. They've still got the same issues that Sydney, Brisbane, Perth, and Adelaide have, and so it's yes, we're just not sure why that's happening in that state. It's a lot of it. When we speak to a lot of investors, they're just not wanting to go there.
Okay, well, let's move on to our second story. Inflation rises to 4%. Inflation has now increased for 3 consecutive months, reducing the chance of an interest rate cut sometime this year. The annual inflation rate rose from 3.4% in February to 3.5% in March to 3.6% in April and now 4% in May, according to the latest data from the Australian Bureau of Statistics. The Reserve Bank is unlikely to reduce the cash rate until inflation has fallen to its target range of 2 to 3% or is on track to do so. Owen, are you surprised that inflation is heading in the wrong direction?
Yes and no. It is surprising that it especially had a bit of a jump. As our treasurer, Mr. Jimflation, has recently said that, yes, it might be a bit of a bumpy road to of inflation going up and down, but I think he's just being very optimistic there. If it's trending up for the last number of months, then it's more likely that yes, we will get a rate rise in the near future. The reason why I'm not surprised in some extent is that there's still not huge amounts of people losing their jobs or hurting, or when you look at the banks, there's not huge foreclosures. It's actually sort of trending as normal for historically. So it doesn't look like the general population is hurting as a result of the interest rates. So when we've still got tenants putting above asking prices offers for rental properties, which is one of the drivers for rents going up, because that's what we call a marketplace. And if people are offering more for a property to get in there, then that's what's pushing those prices up. And that's a major contributor to the inflation figures.
The RBA increased the cash rate 5 times last year, but has held rates steady since November 2023. With the benefit of hindsight, Owen, should the RBA have made at least one more rate increase?
No, I don't think so. With all the figures there, it at the time it seemed like they were pushing it too far, and so I think if they were to make another increase soon, then they're making the right decision. I think with the benefit of hindsight, well, I thought at the time that they weren't lifting rates quick enough, earlier enough. So that's my only criticism of what the RBA has done. They should have raised rates a lot quicker and done it earlier enough to nip it in the bud. But it's we're here now, and with inflation starting to creep back up and jumping up this month, it's we might need to make that hard decision again once or twice. And of course, with where we've got tax cuts kicking in today, and as well as pay increases, as well as credits to electricity accounts that the government are pushing in. We might very well be looking at a higher inflation figures. So it's maybe your call earlier in the year where about the tax cuts should have been pushed out to next year. You might have been right there, Nick.
Well, you don't need to sound so surprised.
Well, I was pretty confident at the time. It's like, no, we need these tax cuts. We'll promise them. Yeah, the public needs them, but it's an issue now of inflation might jump again over the next month or two, and if that gets up to 4.5% or even higher, then we're in trouble. And if we have another 1, 2, or 3 rate rises, then that'll take out any of those tax cuts that we've seen.
Well, our final story today is something completely different, and this is one I found really interesting. Foreign buyers purchased 5,360 homes in the 2022-2023 financial year. If you're wondering what percentage of Australian properties are bought by foreign buyers in any given year, the answer is not many. The latest Treasury data on foreign investment reveals that during the 2023 financial year, there were 5,360 residential real estate purchases with a level of foreign ownership. By comparison, buyers of all kinds make about 500,000 purchases in any given year, which means foreign buyers represent about 1% of the total. Owen, given that local buyers represent about 99% of all purchases, do we give too much attention to foreign buyers?
Absolutely. We just like we give too much attention to investors, we give too much attention to first home buyers. But if we look at the figures, the majority and the by far the biggest portion of all purchases made are made by owner occupiers who are selling and then buying again. And I remember this was first brought to light to me when I was having a conversation with a senior executive at a mortgage insurer. So now people could imagine it was a bit of a dry conversation, but what he was talking about was we were having the conversation about how much you would expect that most mortgage insurance, most borrowers that were taking out mortgage insurance, you would assume would be first home buyers. And he said, no, well, it's like 80% are second home buyers who are upgrading. And so it's the level and the amount of mortgage insurance that they pay is usually a lot more as well, because they're going from a smaller property up to a bigger property. So the amount that they're borrowing is a lot larger as well. So it just shows that what the media focuses on, because it's a bit of a boring story. It's like, oh yes, someone who just sold their property and buying again is like pushing up the price. It's just like, yeah, no, it's like who can we pick on today? You know, that they need that headline. It's first home buyers that are driving the market, or investors are driving the market, and they're really only a small portion. Yes, they all play their part and they all add up to the total sum. But yes, we're coming back to the overseas investors and foreign buyers who are buying up the whole country, apparently. When it comes to residential real estate, yeah, it's only a very small portion.
When foreign buyers do purchase, they're generally required to purchase new homes to help increase the housing supply. However, they can also buy vacant land if they build on it within 4 years, or established dwellings if they're temporary residents who live in the home and then sell it when they leave the country. Do you support those restrictions, Owen, or should foreign buyers be able to purchase without any restrictions?
No, I think those restrictions are fair. It's, you know, there's lots of choice there. If they're living here temporarily, then yeah, no reason why they can't buy a property, and they're bringing money into the country, and so that's stimulating our economy. If they're buying for purely investment, then buying new homes helps to stimulate new properties into our market, and helps to employ builders and developers and all those contractors that are involved with the process of building new properties, and that also provides new stock into the market for renters, which we need more properties in the rental pool to be able to help prevent rents going up so much as they have been, and stabilize those prices. So we need foreign buyers to be able to help do that. Now, do we want them to be 5% or 10% of all purchases? It's like, no, I don't think so. So I think 1% is fairly healthy. Could we go to 2%? Sure. But you know, if the demand was there, and if the supply was there, more importantly, to start off with, especially for brand new properties, yes, that could expand, and we could do with the investment to be able to bring in more properties into that rental pool. So, yeah.
Well, another really interesting week. We've talked about foreign buyers, inflation, property prices. Really enjoyed the chat as always, Owen.
Thank you, Nick, and hope you have a great start to the new financial year. And we'll see you next week, hopefully with no coughing or spluttering from either of us, and for the weekly news. Thank you.
Thanks, Owen. See you next week.